Full beginner trading course, leverage, spot, futures, deposit, withdrawal, P2P, how to use an exchange, how to actually analyze the market, what to do, what not to do, basic risk and money management, order setup, limit orders, market orders, etc. So if you're a complete beginner, or also if you're an intermediate trader and are not using proper complex risk and money management, you're going to also learn a lot. So without any further ado, let's just jump straight into this. And certainly, we're going to start with the most basic things. So we're not going to talk about analyses, proper entry zones, proper exit zones, proper targets, etc. First, we're going to discuss the most basic stuff you can imagine. So for that, you need to find an exchange that you can trust, that is good in terms of user experience and user interface, has volume, is reliable, and something that actually has all the tools for beginners that you might want. So if you go to CoinMarketCap, there's quite a few interesting options. For today's video, I've selected Bitget, which is number 6 right now, top cryptocurrency spot exchanges. Among spot exchanges in terms of derivatives, Bitget is actually number 4 with daily volume of over $12 billion, which is pretty nice. And their taker fees and maker fees are quite standard, so they are pretty good. I've traded on them for many years. I've known them for a very long time, and their user interface is pretty nice. And right now also, as a special bonus to every one of you guys watching, if you use my link down in the description of this video, which you can find again in the description of this video, you can claim up to $6.2 thousand in Bitcoin as welcome rewards. So, but it's only if you're going to use the link down in the description of this video. Bitget's provided it specially for this tutorial, so you can sign up with Bitget and get up to $6,200 in deposit bonuses, which is something you can use for your own trading. It goes into your futures account. So if you lose money, you first lose the trading bonus, and if you make money, you can withdraw the money. So it's cool, it's nice, and it's for our community exclusively, so go use it to your advantage. Now, when it comes to the platform itself, and the first step is for you to sign up and for you to register. So you can use the link down in the description of this video, go sign up, register, complete your KYC process. Normally it's going to be right here in ID verification zone. Well, this is the world we live in, so this is what you're supposed to be doing. And then you're ready to trade. However, let me show you exactly what it all looks like and what you can use here and how to actually fund your account, etc. So the first step is to sign up. That is easy enough. I think I don't need to show you how to put in your email and password and actually complete the KYC, which is very straightforward. When it comes to the assets, for you to be able to start trading and to claim all the bonuses, by the way, and if you want to claim your bonuses, they're going to be inside the reward center right here. So you'll find it exactly in the reward center. So now, for example, I have 30,000 bucks in this account. Let me show you how you can actually start trading. So basically, when you deposit your money, which is what, actually, you know what? First, let me show you how to deposit money. For this is why I love Bitget. They have so many options to actually deposit money. You can buy crypto with a debit card, with a credit card. Actually, you can purchase with dollars, with euro, with British pounds, with Australian dollar, and etc. So this is, oh my God, there is a lot more. So, oh wow. So globally, look at how many, oh my God, wow, incredible. So from anywhere in the world, basically, there is almost any fiat currency you want to actually purchase crypto. So then also there is P2P trading also among buy crypto stuff. So this P2P where you can buy crypto with fiat, so with dollars, euro, etc. from other people. Then there is also fiat OTC for bigger deals. So if you want to buy $5 million worth of crypto through a over-the-counter type of away, then you can do that here in fiat OTC. And also there is this quick buy option, which is similar to the debit card purchase. And one of the coolest things that they have, which is something that, you know, after this bull run, you might as well enjoy some of your profits. And I do. I actually have on one of my another Bitget accounts, I actually have this card ready. And that's something I'm going to show you guys also on Instagram. This is their card, which has, well, limitless spending. There are certain limits. However, you actually get access to a debit card, which you can apply for and you'll receive it. There's a physical card as well as the virtual card, depending on the country where you live and where you reside. And you can actually have money in your spot account, in your assets, and when you're spending money, on funding account. When you're spending money with your debit card, it actually auto converts your crypto into the dollar, euro, whatever, and you can actually spend it in stores, in restaurants. You can use the ATM. You can actually withdraw money in the ATM. So that's really cool, and you can do that too. And so it's just overall a very nice overall experience that actually we're gonna go over all the features here that you can be using as a beginner as well. But first, you've learned about the debit card. You've learned how to buy crypto, a bunch of options for you to actually buy crypto if you still have no crypto. And certainly if you already have crypto and you just want to move it to Bitget, then you can do so easily by just going to your deposit button. When you click it, you just select that you actually want to deposit in terms of crypto, so you don't want to use fiat. And then here you're gonna see your deposit address, depending if you want to deposit USDT, if you want to deposit Bitcoin, which chain you want to do it on, for example, Tron chain, and you just select, you copy your address and you actually send the money to this address, and it's going to end up in your Bitget wallet. Very straightforward. So now when you've deposited money into your account, you go to Assets Overview, and then here you will see exactly what you have in spot, what you have in margin, what you have in futures, and what you have for, we're gonna get to this, which is bot trading. So you can actually do a lot of bot trading separately here as well. And then your funding account, mostly that is for the debit card, for example. So, and then earn, so if you want to do lending and staking and actually get a return on your investment, it's also possible here on Bitget. So, another one that I wanted to show you, so therefore, like right here, I have money in spot trading, and for me to buy, so here separately you can actually check what you have in spot. And if you don't know what is the difference between spot and futures, spot is that you actually own the crypto. For example, here I have a little bit of Bitcoin, I have a little bit of Ethereum, XRP, and I actually own these coins in the account. If you're trading with futures, you're not actually buying any crypto, you're just trading on a contract basis. So you're just signing a contract that if the price of a certain asset reaches a certain price, you will make or lose certain amount of money. And when you close the trade, you close the contract, and then it's getting settled. So you're either getting a profit or a loss, but you're never actually holding any crypto. So yeah, and then for you to actually be able to buy some crypto, it's very simple. You go to trade. Then if you want to actually buy crypto, you click spot. Then you just can generally click spot, and then it's going to open your purchase terminal and your trading terminal. And here you can decide as to what you want to purchase. For example, you want to buy, I don't know, what is it? Let's say Ethereum, something that finally needs to pump like crazy, considering that Donald Trump is betting so heavily on it and it's so infrastructural. For example, not financial advice, but I hold a lot of Ethereum myself. So, for example, you can go, actually, there is also leverage here, which you can use, but for spot, I don't know if you're going to be using leverage that very much, but it's actually possible to use leverage. And leverage is basically when you're entering a trade with more money than you have. So if you have $1,000, you can actually buy Bitcoin with 3,000, and the 2,000 you're borrowing from the exchange, which means that if the price drops, let's say 30%, you can lose the entire deposit and you will be so-called liquidated. So that's why be very smart with leverage that you're using. So therefore here, there is an option for up to 10x, which is pretty huge for spot, considering you're actually buying the crypto, and it's not going to be free. So for all the money that you borrow in order to buy the cryptocurrency, you will have to pay an interest that can fluctuate. So, but anyway, for example, if you just come out here and you just simply want to buy Bitcoin, so Ethereum in this case. So for example, you go, there is a few different order types. There is limit order, there is market order, and there is OCO order, which is, there is so many different ones, including the trailing stop. It's the stop that is actually as the price pumps or drops, if it's a long or a up. Now in the case with the spot, that's different. Okay, so with the trailing stop, if you purchase ETH and it keeps pumping, the stop loss will keep moving together with the price. So if it dips, it will just stop you out and you will leave with a profit depending on how crazy the pump was. Then we have also the OCO order, which is a bit more of a professional tool, so we'll probably get back to it in a while. What most people will be doing, they're going to be using either market order or the limit order. So what is the difference? Market order is basically when you are at the current price, you are purchasing crypto. That's it. So for example, you put in, you want to buy $100 worth of Ethereum, market order, you can set out your stop loss. So for example, your take profit can be, I don't know, hopefully at some point $8,000 per Ethereum, and then your stop loss, let's say, is 3,000. So you put these things in, and then you will see this is an asymmetrical bet. Well, again, but if the price comes to 3,000 before it goes to 8,000, you can get stopped out and you'll lose money instead of making money. But nonetheless, this is where the analysis comes in, and you have to be protecting your assets. You have to have proper risk and money management. And also at the same time, you're supposed to be trying to take the big move, the big narrative that is supposed to happen. So, and as an example here, you just click purchase ETH, and then you just have purchased it. And that's about it. So you'll actually be able to see it in your spot portfolio. So then you just go to spot, you click assets, and then in your assets in spot, you will see the Ethereum that you actually have just purchased. So if you, for example, want to sell your Ethereum, as an example, then you actually can find it here. You can click trade, and I think it's going to actually open up spot. And yes, it did. For example, if you want to sell it, then you can do market. You can do, for example, I don't know, whatever Ethereum. I have $1,000 worth of ETH here, which is sad. But anyway, click sell, and you've sold all of it. And then if all of your take profit and stop loss is going to show up right here at the bottom. And in this case, we can adjust it, we can edit it, or we can cancel it. And since I sold all the Ether was in this account, I can cancel it. Now, when it comes to limit orders, so for example, you don't want to buy this asset here at $3,300. You can put in, for example, I want to buy 1 Ethereum at the price of $3,000. So, and then you can also set out immediately the take profits and stop losses that will be put out for you automatically. But let's say we don't want to do that. We just want to buy it at 3K. And what it's going to do is it's going to place an order, a limit order for you. If the price reaches 3,000, it's going to execute the order, and it will buy 1 Ethereum for you automatically at this price. So a lot of active traders are using limit orders because they're trading price extensions, and we're going to talk about basic structures that could be used for your analysis. And then when you're placing the order, you actually are able to get into the asset on the liquidation momentum. So whenever there is shorts being liquidated or longs being liquidated, you predict at which price level there is a likelihood of a reversal. And usually if it's a correct price level, then the price is going to be very fast. And sometimes you will not be able to catch the trade, and the only way with a market order. So what you will have to do is place your limit orders and then just hope that it's going to actually get them and then bounce off of this liquidity zone. I know it might sound a bit complicated, but this is going a bit deeper into proper analysis and type of trading. So then if you want to cancel your order, it's as simple as just you're going to your limit and market orders, you click cancel, and that's about it. One of the important things I want to mention here is that you can actually, preferably always, is to use limit orders. Why? Because they're a lot cheaper than market orders. Because a limit order, it actually goes into the order book, and it's so-called the maker order. So you're actually making the order book, and it's a lot cheaper, sometimes like 3, 4, 5 times cheaper in terms of commission to use the limit order. When you're using a market order, so you're not feeding the order book, you're just clicking to buy or long short, if it's futures, with just one click, and usually it's much more expensive. So sometimes you need to use market orders because of market conditions. Sometimes you get a chance to use, depending on your strategy as well, you will get a chance to use limit orders, and whenever you can, you should, because you're going to save yourself a lot of money on commissions. Now, let's discuss, before we move on to futures, before we discuss how active trading works, what kind of patterns you can use for analysis, some basic ones for beginners. We're going to discuss the features of Bitget itself. So we've already looked at spot. You already understood how it all works. We also, interesting concept here is that they actually have demo trading for spot. So if you click on demo trading, then it's actually going to move you to Bitget demo, and it's going to say demo at the top. And well, the same basically as any exchange that actually has demo trading. And then you can switch back to live trading. And also they have demo trading for futures as well. So if you have no experience in trading, maybe it's a good idea for you to practice a little bit for maybe a few months, maybe a year, to make sure that you compile proper trading statistics. And that's something that we teach also in our trading club. I'm going to leave a link to the trading club down in the description of this video if you want to go really deep down into really complex analyses and proper trading statistics and liquidity zones and really deep stuff. Then you can join our trading club and you can see our trades, by the way. There is even our own copy trading available, and you actually get access to our 150 lessons of learning material where you learn all the complex ways of trading, also on Bitget. So moving on, here we have one of the things that is, I think, worth mentioning is that in the entire ecosystem, there is so many things in Bitget that it makes it a very good platform overall for any beginner as well as a professional trader. So we've discussed how you can buy crypto, we've discussed spot trading, but we're gonna actually get to futures trading in just a second. So here also they have in markets, you can just find interesting data. There is also interesting insights from traders. There is also a news portal that you can use. I don't know if you're gonna use that much, but nonetheless it's available to you. Now, when it comes to spot trading, we've already discussed demo, we discussed the general way of purchasing crypto. Then we're gonna get to how you actually buy spot crypto. We're gonna get to futures, but before we do, also wanted to mention what else Bitget actually has. They also have bots, which are pretty cool. So if you want to use bot trading, you can actually go to Spot Grid. And there is going to be a strategy you can actually copy. So it's some kind of AI, it's some kind of simple direct algorithms. And you can actually select the grid you want the AI to trade, or actually you set out the actual precise price range, lowest and the highest. You put in the amount of grids you want, and then it's going to be trading for you up and down and up and down. But you need to predict that it's going to be within a certain grid. So for example, if it's been almost in the same grid from like $90,000 to $106,000. So in this vicinity, you can actually ask it to long and short and long and short and long and short, but you're the one who needs to predict if it's going to be in this range. If it's not, well, it's not going to work. So, but they have a lot of really cool features in terms of bots. They have for futures, for spot, they have also spot auto invest. So if, for example, you want to just leave a few instructions and forget about it and just write this bull run, there is auto invest for example, every day, every week, every month, etc. But one of the coolest things, I think, and they have so many different things, you can go and check them out, but one of the coolest things here is the funding rate arbitrage. So this is actually, funding rate is something that is unique to crypto. It's basically when there is a lot of people longing, they're going to be paying a funding rate, a funding fee to the people who are shorting the market. And in the bull run, sometimes if you're actually shorting, well, I mean, you're going to lose, you would think that you would lose money on shorting. However, at the same time, you will be making very good money on the funding rate. So for example, in the last 90 days, the APR is 16% on Bitcoin's funding rate. So if you would be shorting Bitcoin, you'd be making on average 15% a year on the funding rate. So, and this, like right now, the funding rate is like 0.01. So in the bull market, like when everything is raging, this can be much higher, like many times higher. So sometimes it can be like 100% a year just on the funding rate at all alone. And certainly you're going to say how you can make money on it if you're shorting something that is growing. But for this, you can use inverse perpetual contract. So you're using Bitcoin itself. Now you need to pay attention. You're using Bitcoin itself and you're using 1x leverage. So you're not using any leverage. So that's, for example, here in futures, you'll find yourself Coin M perpetual futures. And then there is USDT M futures. So therefore, these are the futures that you're not using USDT. So you're not using the dollar to actually trade. You're using the coin itself. And if you don't know, well, welcome to crypto. You can trade either with the dollar, so you're settling your trades in the dollar value, and you have USDT that you're trading with, or USDC. On Bitget, they have both. You also can, if you don't want to hold the stupid dollar, you want to, for example, use Bitcoin itself alone, you don't want to touch the dollar, you can have Bitcoin, and you can trade futures using your own Bitcoin. So, and when you have it, so imagine you have $1 million worth of Bitcoin, then you want to actually have some funding rate arbitrage. You take this, I actually tried this before, I actually made quite a bit of money with this when the market was stagnant previously. What I did was I've taken personally $1 million worth of Bitcoin. I went to inverse futures. So in this case, it's called, it depends on the exchange. Here it's called Coin M futures, perpetual futures. And I would take $1 million short position using the Bitcoin I have. So, but it's going to be 1x leverage. So no leverage. If it's going to be leverage, then if it actually keeps pumping, you will start losing money because there is the position itself with 2x leverage, for example, would be not 1 million, but $2 million. So therefore, the value of Bitcoin keeps going up, the Bitcoin you're holding. But since your position is twice the size because of 2x leverage, the loss you will have on a short is going to be greater. So therefore, to balance this out, if you take a short, there is a way if the price pumps, you will not lose anything because you're holding the Bitcoin. For example, $1 million worth of Bitcoin, it keeps going up. So the value of the Bitcoin you're holding keeps going up. But the short that you have loses money, but it loses in Bitcoin amounts. So the dollar value stays the same. It's going to still be $1 million. If Bitcoin goes to 300,000, that's 3x, it will still be $1 million. All you're going to make is this funding rate, and it's called the funding rate arbitrage. And a lot of people use this, and a lot of people in crypto make crazy money with this. And it's cool that actually Bitget has such a dedicated section to funding rate arbitrage. But again, it's a more complex type of stuff, but nonetheless, I thought to mention it because it's really cool. Then certainly they have the basic stuff like spot copy trading. They have futures copy trading where you can actually copy other people. There is bot copy trading, so you can automatically copy different bot strategies that you can watch separate tutorials. You can select the bot that you really like on Doge, on XRP, on Trump, and the bot is going to do the job for you. And certainly if it loses, it loses. So be careful with those. And always please use proper risk and money management. So moving on, what I think is also worth mentioning here is in terms of their entire ecosystem is that they also have a lot of earned stuff. So if you want to have your savings in crypto and actually have some kind of accounting for it, they have that. So they have premier loans. They have SharkFin, which is principal guaranteed high yields, which can be also carrying its own risk. But there is so many things you can explore. On-chain earn, guaranteed earnings in both bear and bull markets. They have crypto loans, borrow crypto quickly and easily using your own crypto as collateral. So there is so many really cool stuff you can actually check out. There's also wealth management. You can grow your wealth with our top-tier asset management team. They actually have asset management as well. So you can check that out. It's pretty big. So crypto is evolving. See, crypto is no longer just, trade futures and that's it. There is so many intricate earn programs. There is staking. There is so many things you can do outside of the spectrum of just trading itself. But again, I'm not going to be delving into every single one of these because it's going to take much more time than anticipated for this tutorial because we need to get to the futures trading and that's what a lot of you guys are interested in. So we'll move on to it as well. And actually, you know what? There's also one last thing. They also have the launch hub. So with the launch pad, where you get access to certain tokens early, but you need to do your own research to make sure that the token is good because sometimes the pre-sales and pre-launches of tokens are of absolute garbage tokens that nobody wants and then they're going to dump on your face. So you'll have to be very careful. So, and there's other stuff. So now, let's move on to futures. So for us to actually trade futures, we need to go to transfer because we need to transfer our money from spot to futures. So for example, from spot to USDT M futures, and again, here you can also put in Coin M futures, so you can actually transfer Bitcoin and do, for example, the funding rate arbitrage. But anyway, so for example, here we put in, I don't know, I want to trade with $10,000. So I move 10K of USDT to futures. Now I can go to futures and I want to, for example, trade Ethereum. As an example, I don't know, I like Ethereum. Maybe it's a mistake, who knows. But anyway, here you get to the same platform, basically just like in spot, which is extremely similar. But the difference is here that you have a different order book. It's more for futures market. And you also get a few extra perks, like also one of the things that in my opinion is pretty cool that you can use here, and of course you can always switch to trading bots and actually have futures trading bots, is something we've already discussed. But here, one of the cool things is the calculator. So you can actually calculate your P&L, so your profit or loss, immediately before you even enter the trade. So it is actually going to give you a total calculation of all the numbers. So for example, if you can select leverage, you put in, for example, 10x leverage, you put in entry price of, let's say, $3,000, you will have close price of $4,000, and fill quantity you'll have 10 Ethereum. And then you can click calculate, and it's going to calculate your initial margin, so how much money you need for the trade, because you're using 10x leverage. So the only reason to use leverage, to be honest, is to free up some capital for more trades at the same time. But here is a tip from a professional, very basic risk and money management, but that's something that is going to save you a lot of time, money, and years of pain in the markets. First of all, especially when it comes to futures trading, because it's different from spot trading and your expectations from the market can be different, never risk more than 1, maybe 2% of your capital per one single trade. Never. Statistically, 99.9% of people who use bigger risk will lose everything on a certain time distance. So that's number one. Also, you always have to take at least 3-to-1 profit to loss ratio. So it means that if you're risking $100 in a trade, your take profit has to be at least $300. Otherwise, it makes no sense. It's also statistically, if you're taking 1-to-1 or you're risking $100 to make $50, short term, it might seem and feel easier because it's easier to take a smaller move, but long term, again, you will have a highest probability of losing everything. And another third rule I want to give you is when you're trading actively inside of a day, for example, and you're taking many trades, if you have, this saved millions of dollars over the course of my last 10 years of trading experience. If I have 3 losses in a row on any one single day, statistically, I stop. Because I know that sometimes you go into revenge trading, you will have trade number 4, 5, 6, 7, 8, and with every loss you'll get more angry, so it's trading psychology. For me, you might recoup your entire loss on the trade number 4, maybe on trade number 5, etc., etc. For me, statistically, 3 trades, and if they're all losses, one after the other, stop loss, stop loss, stop loss, I would stop. Because statistically, my performance metrics over the last 10 years have proven to me that it makes no sense to trade intraday beyond 3 losses. So that's just my suggestion. You can evaluate your own statistics, and if you don't do proper statistics and with at least 15 different parameters per every single trade, it's not just time of entry and time of exit, well, guess what? It's not good, because trading is a business, and you need to have proper accounting for your trading, and you need to adapt to the market conditions, because things like volatility can change, things like average true range can change. And if you don't change your expectations for every single trade, you don't pay attention to the things like ATR, or you don't pay attention to things like major trend and the local trend, and you don't cross-check them and cross-examine them, and therefore try to see what has changed in the market, and therefore adapt your trading strategy, you will not make it. You might get lucky here and there. There are people who are lucky, but if you want to be betting on that 1% luck, go for it. But in my opinion, it is bluntly stupid. So going back here, so you can also calculate the target price. You can also calculate your liquidation price, so at which price you'll be completely liquidated. And I do not suggest entering a trade where you have a liquidation price, because it means that you're not using proper risk and money management. Me personally, sometimes I have liquidation prices because for me a stop loss is the entire account. And like the total liquidation of the account is for me just a stop loss, because I trade with millions of dollars, and for futures trading, I don't put in more than a few $1,000,000 into exchange, and that is just, it constitutes only a few % of my entire crypto holding. So my approach can be a bit different. But if you've put in like 10K into an exchange, and it's all the money you have for trading, then you always have to use proper risk and money management within the exchange itself, and not risk more than a certain percentage per trade, which means that normally you will not have a liquidation price. It's going to be just too far. So, but you can calculate it here, and etc. So many really cool things. Now, getting to the trading experience itself. So when it comes to the whole layout, I think I don't need to really tell you about it. They have very nice trading terminal itself. You can have as many charts as you want, which is pretty cool. I really love this setup. You can also have you can actually create go full screen if you want to really analyze it, full screen mode, because like this small tiny one is not great. So you can also play around with it. You can fiddle it like this. You can just make it bigger. It's up to you as to what you want to do, but the default is about like this. So when it comes to the chart itself, there is also so nice that they actually give you the coin overview. They give you some trending news when it comes to Ethereum. And trading data itself, which is separate, you can access and have a look at it on your own free time. So when it comes to analysis, it's actually, if you're using TradingView, for example, for me, I've been using TradingView for most of my analyses. I really enjoy TradingView. It just is one of the most comfortable ones in my personal humble opinion, and you know, it's always been just the nicest. But Bitget, in this sense, also is pretty convenient because it's got TradingView built into it, and this is something you can use because like all the drawings, for example, just basic TA right here, support, resistance, very basic, but nonetheless, like look at how precise it is, and all of these movements are actually very nice trading opportunities. So they also have absolutely the same brush. It's the same logic. They have all the same figures. They have all the same. It's TradingView. Like, come on. So it's basically the same thing. So, and let's say moving on now to the order itself. So for example, you've done the analysis. So you have this wedge, support, resistance. Again, you cannot just trade off of simple technicals like these, or look at, okay, we have like the bottom wave, another bottom wave. So we're supposed to be going higher. All these things are great, and this is like you can use different flag formations. You can use support and resistance is very important, and especially when it's accompanied with volume, and you see where is the scariest part for people when there is volume and some kind of breakage of very strong level, but you do also at the same time understand that fundamentally, macro-wise, cycle-wise, you're supposed to be going higher. And then by coincidence, some good news comes in right at the bottom when everybody got kicked out, and it just pumps to the moon. This is how you trade against the retail, and you trade with the smart money. So you can also write this down as an interesting small insight, which will help you form correct expectations from the market. But you can also trade just technically, and for example, you take the breakout right here, which it has consolidated quite a bit, created support and resistance levels, and then we have a breakout with a bit of volume, and you can put a target on somewhere right here, because a lot of people, there is another order block and liquidity block here, so a lot of people are going to be taking their profits from here, and then it's unclear if it's going to drop lower, if it's going to consolidate lower or higher, or just keep pumping. It's hard. So what you want to do is you want to select the time frame you're trading. So if you're trading a daily chart, 4-hour chart, 1-hour chart, and if you don't know what that is, it's basically when one candle takes either 1 day to form or 1 second, like this one right here. And you just can do, it looks ridiculous, but nonetheless. So you can do analyses in basically almost any chart out there. And you're going to see oftentimes very big key market levels will have reactions to the price, even in the smallest time frames. And these are all tradable. And that's the whole point of trading. It's very versatile. It's very flexible. But what you need to remember is that you need to select your own approach. You need to have proper trading strategy. You have to have a lot of experience. That's why I've suggested using demo trading first, unless you are part of, for example, Kralow Trading Club, which is linked down in the description of this video, where you actually see the trades of professionals and you copy them directly on Bitget. Then this is a different story. But overall, the experience is that you need, and my experience dictates that I always combine technical analysis, fundamental analysis, macro analysis, liquidity zone analysis, cluster analysis, which if, for example, in terms of liquidity zones, this is the liquidation heat map that is also, this is just a rough example. You can find it on CoinGlass, for example. Unfortunately, Bitget doesn't have it. So for you, this is going to be one of the 100 tools as a professional trader that you would use to really understand where is the liquidity, which means where is the money. So oftentimes you will see that there is more money on the upside. So it makes more sense for big players and market makers because somebody is making this market. Somebody is actually pushing these prices higher or lower and actually balancing out the orders. So, and oftentimes when there is a liquidation event, when somebody gets liquidated and completely wiped out, exchanges, brokers, market makers make very good money. And this is their bread and butter, basically. So, and you will be able to see in the, for example, in CoinGlass and liquidation heat map, where is more liquidity? Where are going to be more people who get liquidated? For example, in Bitcoin at 106,000, there is a lot of liquidation, so a lot of stop losses are at this level. And because it's crypto, it's transparent. So you can see all this stuff. So therefore, all I'm saying, like, you cannot just trade by liquidity, because if the liquidation heat map, if there is going to be some kind of news that comes out, Donald Trump says something, it's going to just pump through those levels, or vice versa. It can always erase. There is always going to be something that is going to be more important than technical analysis. One piece of news can be more important than the other one. Sometimes the liquidation heat map is going to be more important than some news that comes out. There's many, many variables. And you as a trader, you need to prepare for everything, and you need to understand everything. Not trying to scare you, just trying to show objectivity and honesty. Okay, so moving on here. Basically, you've done your analysis. For example, we have this resistance right here, and we think that, okay, the price is going to turn down just because, you know, that's what it's been doing, and the chances of the breakage here, there is no news. Maybe it's the weekend, it's quiet, so there is no volatility. So, for example, we were expecting it to go down. Just, again, don't go all in on this short, please. It's just as an example. So then all you got to do is you go here, you select your margin mode. So if it's isolated or if it's cross. So what it means is that if it's isolated, for example, you need your initial margin for a trade. If you're using 10x leverage, you want to, let me just show you an example. So for example, we want to go in with a market order. We want to take just, for example, 1 Ethereum. And what we need is basically for this 1 Ethereum position. Actually, you know what? Let me change it. You can also change it from the quantity in ETH for the trade, or the cost USDT, or the nominal value of the trade itself. So the cost will be what it's going to cost you to open a trade. For example, if you want to open a $10,000 trade with 10x leverage, your nominal value is going to be 10,000, but your cost will be 1,000, because the rest 9,000 you're basically borrowing from the exchange because you're using a 10x leverage. So therefore, for example, if your cost or nominal value, let's go by nominal value, we want to open a $10,000 Ethereum trade, and it's going to actually tell you what is the position size, which is 3 Ethereum. And in this case, with nominal value of 1,000, your margin requirement right here is going to say cost. So your margin requirement, how much money is going to be frozen in your account to guarantee that the trade can operate. So it's going to be $1,000 because our leverage is 10x. And when it comes to leverage, guys, it doesn't really matter much what leverage you're using. You can use 100x leverage, 2x leverage. The only thing that it changes is how much money you need to guarantee for a trade. So, I mean, what matters the most is how much you're risking per one trade. You can use 100x leverage, and the trade can be so tiny value-wise that you will be still risking just 1% of your deposit per one given trade. Or if you're risking if it's a big trade, but you're using only 5x leverage, you could be risking 50% of your balance per one single trade. So leverage doesn't matter. I usually use 10x. It's fine. It's just a good balance, and that's it. So, and then you can adjust it here, obviously, up all the way up to 100x. If you use just 1x, it just becomes almost like spot. So there is no leverage at all. So, and here, basically, if you have 10x leverage and you're using isolated, so what is going to happen is you put in a trade that is going to, once you have this cost of $1,000, this is going to be the limit for you in terms of your liquidation. So the maximum you can lose in this trade in isolated margin, because it's isolated, is this cost right here, $1,000. So in this case, if it's 10x leverage, if the price of Ethereum drops by just 10%, you will lose this trade completely. You will get liquidated and the trade will close. But if you want to have more breathing room for your trades, you can click cross margin. And in this instance, if your nominal value is also $10,000 and your cost is 1,000, but if the price, your liquidation price is going to be much, much higher or lower, depending if it's a short or long, because it's going to start digging in to your derivatives account. So whatever amount of money that you have, for example, in our case, I've put in 10,000, your liquidation price will be calculated based not on the cost of 1,000, but it's going to be based on your entire holding in your derivatives account, which is in our case, it's 10,000. So therefore your liquidation price, if it's a long trade, is going to be much lower than if it was the isolated margin. So it might, like I would suggest for you to use isolated if you're using just proper risk and money management. This is all the money you have in crypto. You don't want to risk it in case there is some kind of flash crash or whatever crazy, and you're using higher leverage, which is not suggested. I would use isolated. I'm sorry, I would use isolated. If you're like me, I am holding only a few percent of my crypto net worth in any given exchange. So for me, I don't really care much. I use slightly bigger risk per position in a given account just because it's only a few percent of my total crypto holding. I usually use cross. I don't really care much. So, but it really is depending on you. The same thing goes for example, so if you want to put in a $10,000 Ethereum trade, you just click, well, I just longed it. Anyway, I was going to short it. But anyway, so for example, you take a trade. This is what it's going to look like. Your positions will be right here. Let me make it a bit quieter. So, and here you can actually adjust it. You can add take profit, stop loss. You can do it either for a full position or you can do it for a partial position. You can put in a trailing stop loss or take profit, so you can actually be moving together with the price. I don't usually normally use these things, but yeah, your realized profit and loss is going to be on the screen. Your realized one, unrealized one. Realized is usually your commission, and then initially, and then everything else going forward. The funding rate is also going to be shown here in the realized P&L, either if you're getting money in terms of the funding rate or you're paying money in terms of the funding rate. So, and then your current position value and your estimated liquidation price, which in our case is $1 per Ethereum. That's quite funny. That's what it's supposed to look like when you're using proper risk and money management, kinda. So then if you want to close your trade, you just click close, and that's about it. And it's supposed to, oh no. So we're flash close, so it just gets it closed entirely with no limit orders. Then if you want to have, for example, a limit order, same thing. If you, for example, want to at $3,000 nominal value, let's say $10,000, you want to open a trade again with your take profit at, let's say, $8,000, which is going to be a profit of nice $16,000. And then, for example, your stop loss at $2,500, your loss would be $1,600. So yeah, this is not a bad risk to reward ratio. This is what we've spoken about. And then you just click open long. And then if the price comes down to this level and has some kind of a quick flash crash, just like here, it could really bounce off of it quickly and you're ready for it and you don't really need to care much. So once the trade opens, the take profit and stop loss get set out automatically, and that's about it. So when you go to orders, you can adjust them. You can change your take profit stop loss. You can adjust the quantity and basically everything else. So then when it comes to the trades, the limit orders, market orders, leverage, the calculator, everything else, I guess I've already explained. You have your order history, you have your position history, you have your order details, transaction history, and general positions, etc. Now, if you wanted to, for example, God willingly, you've made some good money in crypto through trading, so how to withdraw it? You go to assets, you click transfer, because you need to, in order for you to withdraw the money, you need to transfer it to spot. So you go from, instead of going from spot to M futures, you go from USDT M futures to spot. You transfer all of the money, and then what you can do next is, or again, if you're using the debit card, you can actually put it into your funding account. So for example, here you can put funding account right here, and this is from where your debit card is going to be taking the money. So, and you can just spend it, you can withdraw it from the ATM. Certainly there's going to be a fee for that. Obviously nobody's going to be doing shit for free. So or you can go to P2P. So you can actually sell someone your crypto for fiat and they will transfer it to your bank account, for example. And yeah, so P2P or the debit card is two ways how you can withdraw your money into crypto, into cash, I'm sorry. But if you wanted to, for example, withdraw your money in general on Bitget, I think it goes without saying as to, it's very simple. So you click withdrawal right here, and you just withdraw it to any other exchange. You can withdraw any coin on any chain, to any wallet, maybe Ledger, maybe Trezor, maybe MetaMask if you want a desktop wallet. So it really is up to you. It's extremely simple. So guys, remember, now you know how to use Bitget, you know how to use proper but basic technical analysis, proper but basic risk and money management. You understand how leverage works. You understand that leverage isn't as important as margin. You understand orders. You understand how to buy and sell spot, how to deposit, how to withdraw. And if you want to keep developing as a trader, you're welcome to join Kralow Trading Club. There is a link to it down in the description of this video. Just generally speaking, the trading club itself is just a pretty cool place to be for any beginner trader as well as an advanced trader, because this is something that is really, I mean, we've done quite well, even through very cataclysmic times in the markets. If we lost money, we lost not that much, like people get liquidated all the time. And when the market was good, we made very good money. So then you can go check us out. You also get complimentary access to our trading education, which is very extensive. You learn about, because what we discussed here in this video is very basic. It's very beginner level. Then there is intermediate level, pro level, and God level. And you can get to the God level complimentary inside the club itself. And also there is copy trading that you can use in the club itself. So all you get to do is just click join the club, and that's about it. And remember about the bonuses on Bitget. So with our link down in the description of this video, just for you guys, Bitget gives up to $6,200 in initial deposit bonuses, which once again you can actually claim in the reward center right here. And as always, peace and love, Thomas Kralow. Stay smart, stay very rich. See you next video.